Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It's a sluggish day of trade in the markets. The benchmarks lie flat while pharma stocks lead the gains. Lupin is the top gainer on Nifty after its Pithampur Unit 1 gets an EIR from the US FDA. Reliance Communication gains more than 5% after the NCLAT allows the company to sell its asset but says the amount has to be kept in an escrow account. And Soba gains the most in nearly 3 months after the company reports its best sales in 12 quarters. The management is confident of a double-digit growth going ahead.
Those are the top stories at this hour. Thanks for tuning in, viewers, to Countdown. My name is Neeraj Shah, and over the next 1.5 hours, we'll tell you all that you need to know about the trade today. It's been a listless day. While there might be a lot of peaks and troughs, but it's been a very narrow band within which the indices have moved. Right now, trading absolutely flat for the Nifty Bank as well. You could argue it's marginally in the green, but it's a flattish move that we have for the Nifty Bank too. And I don't think the mid caps and the small caps have done too much dramatically different. So look at the mid cap and the small cap indices, about 1/3 of a percent, 0.2%. So hardly any moves there. There are individual stocks though which are acting up. So let's pull up the Nifty heat map first and show you what's happening out there. Lupin doing extremely well. Titan back to winning ways after correcting a bit over the last few days. And all marketing companies by and large seem to have had a fairly decent outing today. The likes of BP, HP, even IOC's not had a bad day. And Reliance Industries marginally in the green, about 0.4%. Not too many losers. Heavyweights like Infosys and Larsen & Toubro. So Infosys out here, L&T out here have looked slightly wobbly. And IT by and large has just taken a bit of a step back. Now, this is the third day in this week that Nifty IT has not had a great day. But by and large, it's not been a bad performance. I just want to pull up one set of stocks here on the wall before I hand it over to Navneet for looking at the liquid universe. And that's the distillery names. Interestingly, GM Breweries, good numbers. Maybe the run-up had happened before. That stock, after a very robust set of numbers, is trading in the red. So that one is down 1.5%. But a clutch of other names, Pioneer Distilleries, Globus Spirits, so marginally in the green, but Pioneer and Globus have had really good moves. Pincon, that tainted name, so to say, is also back in the green. But Globus Spirits up 8.5%. Look at Pincon Spirits up 10% as well. That's a clutch of these alcohol companies have done very, very well. And Arcom has done exceptionally well for itself in today's session. 5.5 or 6% up in trade after the NCLAT decision as well. So that stock seems to be doing okay. But maybe some of these form a part of the FNO universe, but a fair bit of activity, Navneet, or muted today?
Well, it is muted. Yesterday's bounce back majorly on Nifty and the Bank Nifty futures was on account of short covering. So we've not seen any major build-up so far. Nifty has just managed to hold above the mark of 10,300. Let's just pull up the futures and see what's the exact change in terms of open interest. Remember, yesterday towards the close, even the premium increased from 18 points to somewhere about 25, 28 points. And the premium has actually fallen from yesterday's level, which tells you that at current levels, maybe they're not fresh long positions being taken here, but the Nifty open interest currently is up nearly 4%. Pull up the Bank Nifty, which is off day's low. Actually, Bank Nifty, after seeing some bit of correction in the opening session, is back in the green now, 24,000, above the mark of 24,800. If you look at the futures, they're trading at a premium of 28 points, and the open interest there has risen nearly 10%. Remember, there was a lot of unwinding which was seen for Bank Nifty futures. Also, if you could just pull up the intraday chart of the Nifty PSU banking index, we had a gap down opening for that one. Reason being, yesterday there was a lot of buying or a bout of short covering seen there, but in the second half we've observed that there's been some bit of buying which has come in at lower levels. So Bank Nifty PSU banking index now almost trading at day's high. India VIX, which fell almost 10% yesterday, has seen an uptick in today's session. That's up nearly 1%. In terms of options data, what to expect in near term? Well, the range remains the same. In terms of open interest concentration, it is still at the 10,500 call and the 10,000 put. So that tells you that's going to be the near term range, at least for the April series. But so far, the out of the money call strikes like 10,400, that's seen open interest additions so far as we speak. On the put side, writing continues. at the 10,000 strike, which is the base for the series, and even the 10,300 put strike, which is an encouraging sign actually. That's added about 3.7 lakh shares, actually 5.5 lakh shares as of now. Remember, in yesterday's session there was a lot of put trading seen around the mark of 10,200 as well as the 10,300. Well, in terms of stock futures, Jubilant Foodworks is having a great day. Not only a great day, in fact, the stock has been on a tear. It's trading at its fresh lifetime highs, up 3.5%. And look at the action. It's gone up on very, very high volumes on the cash side. But look at the futures. There's been significant amount of OI addition here, almost 32%. And the futures are trading with a premium of almost 10 rupees. The other one, the mid-cap IT pack, is back in action. And besides Mindtree, you've got NIT Tech, which has gone up on high volumes on the cash side, and the futures of NIT Tech right now have seen some bit of OI addition on the upside, which is telling you that, you know, the fresh long position 20% higher for the NIT Tech April futures continue for stocks like NIT, Hexaware, and even Mindtree, Neeraj.
Well, looking strong for the markets by and large, but it's time now to get a global voice, Navneet.
Yeah, that's right. And I think we've got our global guest. Let's get in Vikas Gattani, CEO of Progress Asia Capital, who joins us on the show now. Hi, Vikas. Good afternoon. Appreciate you joining us today on Bloomberg Quinn. Well, my first question to you is, you run an offshore Indian fund. Could you tell us a bit more about what does your fund do and what's been the performance so far and what's the expectations going ahead?
Sure. Progress India's Opportunities Fund is a offshore US dollar denominated absolute return fund. Fund has been in existence for about 3.5 years, and it caters to institutional investors and high net worth investors. The fund tends to focus on the strength of India, which is its demographics. So it tends to focus on companies or businesses which are beneficiaries of the spending patterns of the young Indian consumer. The fund has annualized return of it's generated an annualized return of about 15% in US dollar terms over a 3-year period with a volatility of less than 11.5%. As I mentioned, it's an absolute return fund, so hence the volatility numbers are quite low, which is pretty good.
Vikas, it's an India-focused fund, as you said, and if we look at the Indian markets, they've actually underperformed this year. If we compare it to the emerging market basket, has that impacted your fund performance?
Yeah, Indian markets have definitely underperformed both the regional markets in Asia and also the global emerging markets, mainly on account of domestic reasons. Our fund, being an absolute return fund, has managed to outperform the Indian markets performance on a year-to-date basis and over a longer term as well.
What about the flows, Vikas, into your fund? Has that also been impacted if one has to compare it to last year?
I guess on a macro basis, sentiment has turned a bit sour towards India for a variety of reasons. But first, more importantly, given that the US equity markets have started on a note of volatility over the first quarter, that has resulted into outflows generally from the regional markets, and India has not been an exception. Having said that, there's not been much significant foreign investor outflows from the Indian market till date. You should also note that over the last 3 years, actually the foreign investor inflows in India has been good, but has been relatively less stronger than, say, in the period from 2011 to 2014. And it's been the domestic investors who have actually been big investors in the Indian market over the last 3 years, if you look at the fund flow numbers. So at the moment, we do not see major concerns from the foreign investors towards India. Having said that, in terms of the flow of funds, having said that, definitely people, the investors have scaled back their expectations to a certain extent in terms of what the returns could be for this year from the Indian market. Let me tell you a little bit more about the domestic investors' inflows. And if you see over a period from 2010 to 2013, for a variety of reasons, including rising interest rates, the domestic equity ownership as a percentage of household assets had gone down significantly to a level of about 2.7%. And what you witnessed over the last 3 years is that reversal where the domestic equity ownership improved back to about 3.7%, which is sort of been the historical norm. If the domestic institutional and retail investor inflows continue to come into the market, then the market will have reason to sustain itself without significant correction going forward.
You've been a veteran fund manager, Vikas, managing monies in all Asian markets over the last few years. What's your view on the global picture with respect to fund flows now? Do you think 3 rate hikes by Fed can actually lead to brunt of outflows from developing markets like India?
I guess as US interest rates are rising and there's QE being scaled back, there is going to be overall liquidity contraction in the global markets. Having said that, one, we do not yet know whether Fed will continue to raise rates and to what extent. There's no significant, the first quarter of this year has seen some outflows definitely from the emerging markets. Will that continue? Only time can tell, depending on how the global markets react to to the extent Fed raises rates and the global markets reaction to that. We do think there is going to be some pressure on flows more towards the later part of this year and early next year.
What's been your take on the RBI policy? It was a bit of surprise when it came to inflation target, which has been revised downwards now. And most of the economists were expecting 1 rate hike this year. Do you see that coming?
Yeah, definitely. Yesterday's RBI policy, they obviously did not raise rates. They maintained the neutral stance, and the tone was quite dovish. And they brought down the inflation expectations. We do not think they will raise rates in a hurry. They would also watch the global, especially the US Fed rates. But at the same time, you've got to understand, India was slow to cut rates when inflation came down from almost double digits to as low as 2.5%. India did not aggressively cut rates. So India, definitely rates have bottomed out and rates will rise over a period of time, but it's going to be a much slower and a prolonged cycle in terms of rate hikes going forward. We do not expect there will be any major rate hikes or any rate hike for this year until the end of this year, unless inflation picks up significantly above the RBI's policy targets. And again, RBI has maintained that for the entire next year, they do not see big pickup in inflation. So there's no reason for a rate hike in the immediate next 6 to 9 months.
Well, we'll have to wait and watch if the inflation targets are revised in the second half or not. But tell us, which are the pockets in India currently that are looking attractive to you?
We continue to believe primarily in the NBFCs and the consumer discretionary sectors. Let me explain to you on a very macro basis why we like the non-banking financial company space. Now, if you look at the overall credit picture, simplistically, the overall non-food credit picture in India, about 63% of the entire credit AUM is from the PSU banks, while about 22% is from the private sector banks and the rest is from the NBFCs. Now in the present scenario where actually the PSU banks and some of the larger private sector banks, they are busy addressing the NPAs and trying to resolve the stressed assets, and at the same time, incorporate better governance practices. The credit growth from that end is sort of stalled, and what is happening presently and will continue to happen over the next 1 to 2 years at least is the NBFCs will continue to pick up on that slack, and that's why the credit growth from NBFCs is going to be pretty strong. That's going to feed onto their earnings. So we like that space quite a bit. We have been overweight that space for a fairly long time, pretty much over the last 3 years, and we continue to selectively like that space. We also like the consumer discretionary space, given the young Indian consumer, his propensity to his aspiration levels, his propensity to buy all kinds of from autos and two-wheelers to appliances to aspirational items. So we like specific companies in consumer discretionary sector.
Because yours is an offshore fund, which means that it is the FIs who are investing into it. Tell us, what's the feedback that you're getting from the FI community before they invest into India? Are they highlighting any concerns?
I guess primary concern with most of the investors, especially the FI investors, has been on valuations. And that still continues to remain. If you look at the past 4 years, Indian, at the index level, earnings have not been strong. They have been in essentially in single digits, and that and since the markets have gone up, the P's have expanded, and currently the market is trading. It was at its peak trading around 20.5 times 1 year forward earnings. Consensus estimates for next year's earnings growth is still about 23%, which looks a bit stretched given what's happening in the banking space. And so, market still trades at around 18 times 1 year forward earnings despite some correction in the first quarter. And that's one of the major concerns from a shorter term point of view. Over a longer term, we are not very concerned because the growth will take care. India should continue to show growth of 6.5 to 7.5% over the next 3 to 5 to 10 years, and that's why going over a 2 to 3 year period, valuations look reasonable. The other concern is obviously the stressed assets in the banking system, the corporate governance practices, and these are something which, of course, currently NCLT is doing a pretty decent job, and as the news flow comes, they are being addressed in terms of resolution of the stressed assets in the banking system, and it's just going to take a matter of some time, maybe about a year or so, as the resolution of NPAs happen. As we move forward in the year, politics is again going to take center stage, especially given that this is a pre-election year, and one will have to. The politics is going to be something which the foreign investor is going to again watch out for. We have one of the major state elections coming up in May, and then going forward you have some of the other state elections followed by the national election. So politics will start playing a bit of a role in the markets going forward.
Thanks a lot, Vikas, for joining us today and taking us through your fund. That's the offshore fund where the FIs invest, and also what's the view of the FI community on the Indian markets. Just switching focus back to the markets, we're just still at about 10,317 for the Nifty. Bank Nifty is hovering somewhere about very close to the mark of 24,800. We're going to highlight two stocks, Whipple Limited. That's the one which is locked in upper circuit as we speak, and also IFP Agro Counter, which we've been talking since morning, where the circuit limit has been revised. That too is now locked in upper circuit with gains of 20%.
Interesting. But now focus on corporates. The management of NALCO is joining us on the show to talk about the pricing outlook for aluminum and some expansion plans that they have. Joining us is the chairman and MD, Mr. T.K. Chand, and Nikki Mirchandani from our research desk, Johnson, to take the conversation forward. Nikki, over to you.
Thank you, Neeraj, for that. Commodity prices have been on a boil, or rather in traction, after the US president imposed some kind of tariffs, and also after the production winter cuts happened. Hello and welcome to Bloomberg Quint, sir. Mr. Chand, the first question that I have for you is aluminum prices have corrected 7% YTD to around $2,000 million ton as the winter production cuts have disappointed, as in only 0.9 million tons of aluminum capacity has been restrained as compared to what we were anticipating to a number of around 2 million ton. I'd like to understand what is the outlook of these prices going forward and the bearings that it would have on the financials of the company.
If you look at the market, it is the aluminum prices are now being driven more by sentiment of arising out of this US trade action rather than market fundamentals, because as far as consumption and supply is concerned, around 15 to 16 million ton per quarter it is getting produced and consumed. In first quarter, market was little surplus, but in the second quarter it is predicted to be little in short supply, maybe around 5 to 6 lakh ton there will be short supply in the market. And demand also, if you look at Southeast Asia, the GDP growth is quite strong, and Malaysia, Thailand, India, elections are around the corner in the next 1 month or 1 year, and so there will be a lot of spending in the infrastructure, and also there is picking up in China and construction industry in Europe and America also. Automobile industry is doing well. So all of our demand pickup is there, and it is estimated that around 4 to 5% increase in the demand will be there. So there should not be any reason why the aluminum prices are taking a bearish outlook. Maybe it is more driven by the sentiment of USA trade action. But nevertheless, in the coming days, I expect that aluminum prices will not take much of the dive down, and it will start having a upbeat. And we expect that prices will be moving somewhere around 1950 to 2050. Within this band of $100, it will move.
Sure. Even as the aluminum prices have been correcting, alumina prices, which are the key raw material prices, have actually gone ahead and they've risen by 19% on YTD basis. They stand roughly around $407 per MT. This is after authority has put it 50% output cut at the unit due to environmental clearance. I'd like to understand the outlook of alumina going forward, and also would that benefit the company?
A rough estimate, every $10 increase, we gain a benefit in the EBITDA by 85 crores of rupees. So increase in alumina prices will have a significant impact on the EBITDA of the company, and from that angle, the current spike in the prices will have a better impact as far as financials of NALCO is concerned, because we sell around 1.3 million ton of alumina in the market.
Sure. Talking about the trade-off between aluminium and alumina prices, are we expecting some kind of moderation going forward in realizations of these two commodities in the Q4 and FY19?
As far as NALCO, we have two revenue segments. One is alumina and another is aluminium. In alumina, increase of prices are there, and there will be a definite positive impact on EBITDA and the realization of alumina. In fact, realization of alumina has increased around 20 to 22%. But in case of aluminium, since the prices are going down and cost push factor is also there, input costs have increased, there is a quite moderation in aluminium realization. But overall, both alumina and aluminum together, if we take the realization and the benefit to the company, will be definitely positive, because we have NALCO has a strong alumina arm which offsets in any kind of downward trend in the aluminum.
Sure, Mr. Chand. You just mentioned that we're looking at a 22% growth in terms of realization for your alumina in Q4. What is the growth figure that we can look at for aluminum realization for the next quarter?
As far as aluminium is concerned, as you know that prices are now moderating and are in the downward trend. So the realization, nevertheless, compared to the last year 17-18, in 18-19, if this moderation does not go further below, then we'll be at the same level. In case there will be a upbeat because of the market conditions, then the realization may be little better. Otherwise, we expect that realization in aluminum will be at the same level because we have taken some cost-cutting measures like reduction in specific energy consumption, which the energy is almost 30% of the cost of production of aluminum. That will give the advantage, and whatever moderation in the market is taking place, that will be getting adjusted with the reduction in the energy cost.
Sure, Mr. Chand. Also, I'd like to talk a little bit about your EBITDA margin, given the cost push pressures that we're seeing right now in this quarter, along with lower realization. Where do you see your margins moderating, or for that matter, sustaining for the next quarter or next financial year?
EBITDA margin almost 50% remains with aluminum and 50% remains with alumina. So alumina increase in its prices is offsetting the whatever moderation is taking place in aluminium. So therefore, we expect that in Q4, the EBITDA which we will be getting, there will be some moderation, but not much, because alumina prices are on a rise. And in FY19, we are expecting that if the alumina prices increases and aluminum prices does not go much of the moderation, then EBITDA will have a bright chance of improvement.
All right, this one is going to be an important one since it talks about your Capex. A lot of Capex expansion plans have been going on with the company, be it in likes of smelter, alumina refinery. I'd like to understand what is the Capex that the company has earmarked in this financial year, FY 2019, as well as for the next financial year.
This year, we are reaching a Capex expenditure of around 1,090 crores. And FY19, we have kept a target of around 1,100 crores, but probably we'll be doing a little more than that. And for FY20, the Capex plan will be somewhere around 1,600 to 1,700 crores, because the major refinery work will start from this year onwards, and next year it will be more. And then by FY21, it will be the final commissioning of the thing, so the balance expenditure will be done. So the next 2 to 3 years, the Capex expenditure will be quite robust, because on account of the refinery work, and by that time again smelter work will come and captive power plant will be coming. So that will again take the Capex plan forward.
And so how do you plan to fund this Capex? Would that be through internal accruals?
Right now, we have zero debt. Funding of this refinery will be entirely from our internal surplus cash, which we are having. And but for the smelter and for the power plant, we will be definitely borrowing. And right now, for our joint venture caustic soda plant, which we are putting up in Gujarat, Dahej, along with Gujarat Alkali, which is a Gujarat government-sponsored company. There we are making a debt-equity ratio of 70-30. But refinery expenditure will all be made from our internal sources.
Sure, Mr. Chand, it was indeed a great pleasure talking to you as always. There was the management of the company pretty much buoyant about the Capex plan and also sustaining the EBITDA margin going forward in the next quarter. Back to you guys.
Thanks a lot, Nikki, for bringing that conversation with the management of NALCO. The stock's not doing much in today's session. It's down nearly 20%. But let's focus back on the markets. We've recovered almost. Nifty's just about trading with cuts of 1 to 2 points. Good time to bring in Manav Chopra, Head of Research Equity at Indiabulls Ventures. Hi, Manav. Good afternoon. What's the call that you're taking on the index after yesterday's run-up? Looks like the markets are taking breather today.
Yes, exactly. In fact, the markets have seen a very good bounce back from its oversold levels, and after a series of declines, say the markets have managed to sustain above its long-term averages, and after positive divergence, which hints for a good short-term bottom in place. So I believe, as long as Nifty sustains above the levels of 10,200, the markets would be inching higher, and we could see the levels of 10,450 on the immediate basis, and 10,600 is definitely on cards. And we've seen such kind of patterns in the in the recent times, when the markets have declined without any sustained retracement rally. So I think one should maintain a buy on dips approach, because I believe this rally would have a good legs on the upside, and I don't see any immediate correction into this, but we could see a sustained upside move towards 10,600.
Manav, the Nifty Bank the last couple of days has been outperforming the benchmark indices, or the Nifty, with reason, of course. Not a big outperformance today, but about 0.25% on the back of this almost 3% move that we had yesterday as well. From a perspective of somebody who's already long on the Nifty Bank, would you advise carrying home the long positions into the weekend, or is it a good idea to take some money off the table?
I think looking at the current levels, one can definitely continue to hold their long positions. Neeraj, after a good long time, Bank Nifty has actually exceeded its 2 weeks highs and has taken support at its 2 years rising channel. So, even at the current levels, the risk reward ratio definitely looks quite attractive. The bank index still has an upside towards the levels of 25,500, which is the levels which is only a brief 38 point levels of where Bank Nifty could see a rally, and also we haven't seen any good retracement rally. So I think after a good cycles, when we count the and take these cycles into the play, I think at least for next couple of weeks, Bank Index could see a good upside momentum.
Manu, what about the individual stocks that you're recommending today?
Yes, my first buy call is on Titan. The stock has been in a very good uptrend, and it has been continuously forming a series of high tops and bottoms. And also today on the intraday charts, there has been a good breakout that has accompanied by volumes. There is a strong support for Titan at the lower levels, which is close to the levels of 920. So recommend a buy into this with a stop loss of 910 and expect the high targets of 990. My second call is on Bank of Baroda. From the PSU banks, most of the banks have been forming a base at the lower levels, but Bank of Baroda recently has formed a double bottom pattern on the daily charts, and has also managed to close above the important levels. Looking at the weekly perspective, this stock seems to have bottomed out for at least next couple of weeks, and also provides a good risk reward ratio. So this stock is a buy with a stop loss of 144 and expect an upside target of 165.
Interesting. A public sector bank and a consumption name which has been knocking on new highs. Titan. It's actually been the last 2 or 3 months have been about a Titan, a Jubilant Foodworks, and Avenue Supermarts related to consumption directly or indirectly. These are the names which have done extremely well over the last 3 odd months at least, if not more. Anand Tandon Johnson, market expert, joins us on the show. Anand, good afternoon. Thanks so much for taking the time out and being with us on Bloomberg Quint. The last that I spoke, and I was on a bit of a holiday, so I haven't spoken to you for a while now, but the last that I spoke, you were bearish. Now, some bit of water has passed and under. The RBI's commentary has come out. Their inflation forecast has been benign as well. Does that temper your bearishness a little bit from what it was earlier?
Well, they are more than their commentary, I think, which is, I don't think that the inflation is going to be benign at all. I think, you will find inflation going up. But the real effect that RBI has done is that it has infused some liquidity into the market and has managed to cool off the interest rates for near term. So for the, that provides some immediate relief. It doesn't, however, change the overall context in which we are operating, which is that you will get an interest rate hike going forward. If you look at, for example, some of the data related to, for example, the inflows into the market, not only into the equity market, but generally the current account deficit and the capital account that we have, you'll find that there is some huge payments being made going out of India, and that is going to put some pressure on the currency. So even from that point of view, I think interest rates have to move up towards the second half of the year. So the real issue is that near term there is some relief because of the cooling off of interest rates. We continue to remain at the mercy of global markets. If they continue to remain volatile with a bias on the downside, which is what I see right now, I think we will also follow a similar pattern.
Anand, the bond yields have cooled off substantially from those high levels that one saw in the month of February, and that's after some measures that RBI has taken. They've allowed the banks to spread across their bond portfolio losses in the next 4 to 5 quarters, and a couple of other measures as well. Do you think in light of all that, we've seen some bit of buying actually coming back in a couple of the NBFCs? Is this the space there where money can be parked in now?
From the financial sector perspective, I think I would imagine that the bet now will have to shift more towards the corporates. I mean, we are really betting on the fact that there is an revival in earnings in this year. There are some small incremental moves towards a little better order book for many of the engineering companies. We are beginning to see some early signs that project revivals are beginning to happen, all of which will mean that the corporate lending book has to start doing better. Also in terms of valuation, that is where the biggest hits have been taken. So assuming that there are no more cockroaches coming out of the balance sheets, corporate facing banks are likely to be a little better performing in my view, and rather than the consumer facing banks. I think there is huge growth in consumer credit, which is going to put pressure on margins, and while the market doesn't seem to recognize it yet, the valuations that they are paying factor in a continued growth, which to my mind seems a little tenuous to believe.
Okay. Anand, the last of, just carrying on with the point that Navneet made, whether due to the bond yields or due to the oversold nature, but we've seen a clutch of quality private sector NBFCs come back. Bajaj Finance is a case in point, but a clutch of others too have moved back. Now, it is anybody's guess as to when is it the hike would coming in. I mean, let's work with an assumption that there is a hike coming in, but there's a prolonged pause in between. Keeping that in mind, and if that is a determinant, I don't know whether it's a determinant for you or no, but if that is a determinant or if some other factors impact your decision, what would you be doing with the NBFC space, particularly the large cap names?
As I said, I think I prefer corporate facing banks at this stage rather than the NBFCs. That said, there is a little while back, there was an argument being made that PSU banks are being recapitalized and consequently they will take away market share from NBFCs. Clearly that fear is out of the way. It is very unlikely that the level of recapitalization will allow most public sector banks to grow, much less take away space of the NBFCs. So to that extent, that fear has proven to be wrong. NBFCs can continue to grow. However, as I said, it seems to be too much of easy money, and the valuations at which most NBFCs are trading doesn't leave you much comfort for anything that happens on the downside. Especially if you look at the microfinance sector, for example, that is trading at astronomical valuations in my view. The rest of the NBFCs like Bajaj Finance, etc., are obviously very expensive, but at least you can hope that their level of due diligence and lending book is far cleaner, and you're not likely to get any bombs along the way. So if you have to be in NBFCs, then you might as well stay with the larger companies. But as I said, I think incrementally you are more likely to make, in my view, better money looking at the corporate banks rather than the consumer side.
You think Ujjivan and Equitas are trading at astronomical valuations, Anand?
So, the problem with microfinance companies and, even banks which are similar is that the assumption is that you will continue to grow at the rate that you are. That assumption, to my mind, means that, in the next 5 years, you and I will also be taking microfinance loans because you'll run out of people to give loans to. By and large, the valuations look cheap because of the growth rate factored in, and the credit cost somehow is taken as one-off. So you assume that, if you lend money to someone who doesn't have any track record of borrowing, has no income, has no assets, and probably doesn't have any history behind it, that is 100% secure and will come back. Whereas if you do a secured loan, that is most likely to become an NPA. So it's just the stage of the market. As I said, my personal preference is to look for slower growth and not necessarily very aggressive growth when it comes to lending.
Okay, that's the view coming in on the NBFC space. Stay on with us, Anand, while we get some more technical check on the markets going. Sarvendra Srivastava, independent market expert, is joining us on the show now. Sarvendra, we had a bounce back coming in yesterday. Are you changing your stance of maintaining that level on Nifty of 9,700?
Yeah, very good afternoon. See, I think on the back of this bond yield cool off, I think definitely this one is more than expected. You would have expected Bank Nifty to probably halt at 24,500, 24,600, and for the Nifty 10,250 was a number to look at. So since that we have slightly gone ahead and done a little more, you would say that yes, the ranges are still there, but we are now at the tipping point. So if we are just at that tipping point, so with bond yields cooling, and if the market was to follow through on Monday as well, then we will have to sit up and take notice as to, are we doing 9,700 from here only, or probably we are bouncing back towards 10,500, 10,600 and then falling. So that is the question. I think the answer I don't have today, but my sense is that if we follow through on Monday, then probably we are headed towards 10,500, 10,600 before any further correction happens on the market. But if we stop here, then I think because of whatever events and whatever news, we've done a little more, but we are still within limits. So probably if we don't follow through on Monday, then we can probably start another leg down from here. That is the pattern setups which are there right now. But any bit higher, and then you would say that probably 10,500, 10,600 is coming. So I would say right now that 10,100 to 10,350 will be the range for Nifty, and I'll kind of stay away and not add positions here. Wait for some clarity either up or down, and then probably take that trade. But yes, if 97 definitely is open, as long as you don't have a decisive breakout past 10,600. In between you can do these bounces, and in between you can do their little moves. But yeah, 10,600 is the main number that I'm looking at. If at all the trend has to reverse, then 10,600 is the number to look at, and in between everything is a trading opportunity.
Okay, so no trade on the index, Sarvendra, but what about individual stocks?
See, looking at what financials are doing, I'll probably go and pick a couple of names there. The filter being, as I said, look at those names in the financial space and see from those NBFCs. The first one is Equitas. I think there the stock is now bouncing back above the long-term 200-day averages. Probably the bounce could extend all the way till 165, 166. So a buy on Equitas. These are spot levels for a target around 165. Stop loss kept at 142.40. Similarly, another financial name from the banking space, KTK Bank, look to buy there as well for a target of around 136, keeping a stop loss at 118.90. And the last one is a sell on CEAT. This stock has bounced back and done a decent bounce, tested its 200-day and finding some hurdle, some resistance there. So I would want to short sell this for a target around 1601 on the downside and keep a stop loss there at 1,666 on a 5-minute closing basis.
Okay, thanks Sarvendra for those. Anand, coming back to you, we're just talking about growth, and I don't know what the market is pricing in when it's giving the valuations that it is giving to Jubilant Foodworks, but the stock has been on a tear. Yes, the delivery over the last 6, 9, 12 odd months has been fantastic, but are you comfortable paying such a top dollar to Jubilant Foodworks, or if you had investments there, you would skim some of those?
Well, that is a sector which is currently very much in favor, and obviously Jubilant has delivered in terms of same-store sales growth quite above market expectations for the last couple of quarters. Do I want to chase that kind of valuation? The answer is no. But at this time, I think the market is not looking at valuations at all. The market is looking for growth, and Jubilant is one of the few companies which is delivering that kind of growth rate in the consumer space. So therefore, the market is willing to pay any kind of price for it. For the near term, it looks like they will sustain that growth rate, so I don't see a trigger that will bring the stock down. But if you're looking at valuation, obviously it's very difficult to justify.
Okay. Anand, the last few days, we've seen select media names come back in favor. The last 1.5 months in particular, some of the distribution companies have seen some very interesting buying as well. Some anchor names being out there, yes, but a clutch of bulk deals in the Den Networks, Hathway Cables, etc. I'm leaving out a Dish TV out here, the DTH players, but maybe you could include those as well. Is there merit in this pocket? It's a pocket that has been ignored, maybe for the right reasons, but been ignored by the market for a really, really long time now. Can it come back to favor?
I think between the distributors like DTH versus cable, I think the swing is coming back towards cable, interestingly. While DTH took over the initial flurry because of the fact that they're better quality, easier to penetrate, and therefore was able to get to places where the cable was rather patchy. The reality is that today you are looking at internet being a major play, and internet-based distribution of media and media consumption being a reality. So the biggest advantage that cable has is that they can actually deliver cable internet as well, whereas Dish or a DTH player cannot do that very easily. So therefore, to that extent, the fact that you are looking at a per subscriber basis valuation, you would find that there is obviously greater value in some of the cable companies, especially if they are more than just a deliverer of television, but they can also deliver internet. And I think that is what will drive the excitement for near term. However, I think on a longer term basis, those which are the media creators and the content providers are where the value really is, because after all, they are the ones who drive the ARPUs and drive the eyeballs to a particular channel. So I think if you have to be in media, that is probably where the actual value lies. But obviously on an incremental basis, if you have suddenly discovered that you want to look at subscribers, then the cable companies are a little better than the DTH companies.
Well, let's find out from a cable company as well. Anand, much appreciate you taking the time out and being with us today, but we'll just take that point that you made forward with Den Networks, because the management is joining us on the show. They're, of course, expanding into a bunch of activities as well. Recently, a clutch of investors have come in. Norway's pension fund has hiked stake in Den Networks as well. Lots to talk about with the management. Joining us on the phone line is Chief Executive Officer of the company, Mr. S.N. Sharma. Mr. Sharma, good having you. Thanks so much for joining in. Actually, before I get to the tariff order guidelines and what's happening with investments, etc., just a flavor of how business is looking like the last 6 or 9 odd months. How has been the subscriber addition? What's been the cost factors at play? Can you give us an overall outline?
Yeah, as of now, we have on consolidated basis, we have 8.5 million subscribers making payments to us in different phases, spread across 13 states of the country. And our ground ARPUs are constantly increasing. Revenues are going up. Quarter-on-quarter basis, there is a growth of 6% on an average. Quarter 3 EBITDA was 81 crore rupees. So overall, the business is looking all set to move in a positive direction. The roadblock was getting the fair share of subscription income from the subscriber. That roadblock has been long taken away. Roadblock has been broken, and now our cable partners are sharing subscription as per the regulation with respective MSO. So overall, the space is looking very good. And going forward, there is enough headroom to increase our subscription in phase 3 and phase 2 towns. And 50% of our universe operate in phase 3 towns. So I would say in next 1 to 2 years' time, phase 3 today stands at 70 rupees ARPU. It's going to cross 125 in next 24 months.
Wow. So you would expect that over the next 24 or 36 odd months, when the ARPU goes up, to the number of active subscribers would move up dramatically as well because of phase 3?
See, as far as our existing universe is concerned, we operate in a analog digital put together. We estimate that our subscriber base is close to 13 million households. A lot of phase 3 and phase 4 universe is yet to be digitized. But you can say in next 12 months, we'll be seeding close to 6-7 lakh of additional set-top box, and overall the number should not go beyond 12.5. That's my personal estimate.
Mr. Sharma, good afternoon. Yesterday in the exchange release, the company has highlighted that you're looking to leverage your existing cable infrastructure across India by expanding your broadband internet services to almost 100 cities in this calendar year. Could you give us more information about it? Are the pilot projects already started? By when do we get to see the first phase getting completed?
Yeah, as we have been doing cable business, the upgradation in network has been happening. It started with coax cable, which is now converted into fiber optic cable across the country. And 90% of our cable network is fully fiberized. And 70% of network of my cable partner is also fiberized. So my fiber optic has reached is close to 100 meters distance from any household that we are covering. So that gives us enough space to deliver data by augmenting this existing infrastructure by putting in small devices wherein the investments are not of high magnitude, and that will facilitate enabling broadband into various houses that we are already operating. Here in the journey, I'll be ensuring that our cable partners also participate equally, and for the back end and for the delivery of service up to cable operator, it will be our part of the job, and carrying it further to the subscriber home is going to be handled by the cable partners. But the whole business will be conducted under our license. The subscription invoice will be raised by DEN networks, and collections will be online directly coming to DEN. Based on the understandings reached with the cable partners, we will be allocating fair share of revenues to them based on the tasks and responsibility plus the investments made by each franchisee of ours. So this is a general model. As of now, we have already conducted successful operation of 10 cities in country, and rollout has started happening in another 15 cities. So in next 1 year's time, we plan to cover 100 odd cities.
What's the, I mean, the numbers sound fairly decent, and it almost seems that there could be a hockey stick effect that could come into play here, Mr. Sharma. I mean, can a successful implementation and a successful execution and hopefully successful acceptance of what you're trying to do lead to a dramatic jump in revenues for DEN over the next 3-4 years?
Yes, you got me right. The success story will be driven by the execution that the team conducts. It's entirely based on infrastructure is already. We have the backend in place since we already are serving close to 2 lakh broadband subscribers. We have the sufficient gadgets and a strong backend mechanism. The servers of various facilities like YouTubes and Facebooks and all those people are already lying in our backend. So I'm pretty sure of enabling and ensuring that we do the project successfully. And the choice of these 100 towns also has been made after considering variety of inputs, depending upon the paying capacity of these towns and the kind of cable infrastructure that we have and the cable partners we have in this town. So I'm pretty sure that the whole thing will lead to huge upside in the revenues of the organization. And looking at the tariff war that is undergoing and in wireless broadband service, over here our projections are based on the 550 rupees ARPU for 20 MB to 50 MB speed services, and data consumption will be permitting up to 50 GB.
Okay, I mean the belief...
And then there will be a variety of packages and different technologies will be brought into place depending upon standards laid down by us and depending upon need of a town. And we will be prepared to meet the speed requirement of 2 gig up to.
Wow. The belief really is that the big elephant in the room will take away the lion's share and the others won't be able to. But if you can share some estimates, I don't want exact numbers, Mr. Sharma, but maybe in percentage terms or otherwise, that if your current revenues were to the tune of 100, how much can this over a course of 2 years or 3 years add to those revenues? How much over 100 in terms of a number can this almost a second line of business add to your top line?
Let's talk after a month or two to elaborate on these statistics. Right now, I am also traveling. You got me at a wrong hour, and definitely I'll be very happy to share these statistics.
Maybe you'll be able to tell me one of this question as well. I believe just wanted an update from you as to when are you expecting the tariff order guidelines from TRAI, because I think the matter is delayed, but maybe you have some sense of the timelines?
Last I heard that Supreme Court gave a direction to Chennai High Court to conclude proceedings in 30 days to 40 days. And if by any chance it's delayed beyond June, then speaking order as per Supreme Court was that July they will take seizure of the matter and they will start carrying the matter out in the court. So in all good estimate, overall it should not be taking more than 3 to 4 months from here on.
Okay. Mr. Sharma, are you traveling for the road show in Chennai? Because I was just looking at the press release. I guess today you had a road show.
I am in Chennai only. You caught me in between 2 meetings. So
are you looking to get any new investors on board?
You heard somebody yesterday.
Yes.
You will keep getting more and more inputs.
So you are looking to get more and more investors on board.
That's not a real focus area for me. But we keep updating people. We keep pricing them, and it's up to us, up to them to do the needful.
Okay, if I can just slip in one last question. Are you looking at an active fundraise to fund any of these expansion plans that you may have over the course of the next 6 months?
For this broadband expansion, we don't need any fundraise. Okay. It all will be happening. It all will be happening from internal accruals only.
All right, Mr. Sharma, appreciate you joining us today and taking us through that update on what's happening with DEN networks. What can one expect in the new financial year? Well, it's time for us to slip into a short break here on Countdown. But on the other side, we get you the Fab 4 stocks of the day at 3:15 p.m. We also get you what the dealing rooms are recommending in trade and some closing strategies from our technical experts. Stay tuned.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjeev Goenka Group, growing legacies.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
there's a bit of a bounce in the markets, and we'll talk about that as well. But first, to some other news before we move full tilt back to the markets. Day 2 at the Commonwealth Games saw 2 more medals for the Indian contingent. Sangeeta Chanu bagged a gold medal in the women's 53 kilos weightlifting category. She also set a new record in snatch by lifting 84 kilograms. And it was a bronze medal for 18-year-old Deepak Lathar in the men's 69 kg weightlifting category. India's tally at the games now stands at 4. A proud day for the Indian athletes. I must say, before we go to Yash for Fab 4, just look at the markets, look at the Nifty Bank. That's had a bit of an uptick in the last few minutes of trade, 135 odd points in the morning. Remember, a couple of our experts, including Raja, had mentioned about going long on the Nifty Bank from an intraday perspective. You made some money if you indeed went there and your stop losses didn't get hit. But Manav, I just wanted to ask you, with this uptick that we're seeing in the last few minutes of trade, is there a trading opportunity if you're brave enough to carry your trades overnight in the Nifty Bank?
Of course it is. See, if you're looking at the Bank Nifty chart perspective, like I said, after 2 weeks, Bank Nifty has managed to sustain and give a close above the levels of 24,500, and it is closing by a very good margin, Neeraj. So I think going forward, I would not be surprised to see levels of 25,100 on immediate basis and 25,500. For anyone who's holding the long positions, a strict stop loss of 24,700 can be maintained. So even you have a good risk-reward ratio. And looking at the overall formation, the bounce back that we've seen is backed by good, buy from the oscillators front. So I think looking at the PSU banks, how they have bounced back from the lower levels, I think I would not be surprised to see at least 8 to 10% rally in PSU banks in the next couple of trading sessions. So I think Bank Nifty, since it has underperformed since quite few weeks, but in looking at the momentum in last 2 days, will not be surprised to see Bank Nifty could be the index that could take the markets higher.
Okay, Bank Nifty currently at day's high, but let's go across to Yash there to find out which were the Fab 4 stocks of the day. Hi Yash, good afternoon.
Good afternoon, Navneet. So first up, we have Soba Developers. Now this one has surged as much as 11% today after the company reported its best ever sales in the last 12 quarters. Now their new sales volumes grew by as much as 40%, coming in at just a little over 10 lakh square feet. Realizations too improved by 7% on a year-on-year basis. The pharma pack was buzzing in trade today. Lupin had surged as much as 7% after the company said that it has received the Establishment Inspection Report, or the EIR report, from the US FDA for its Pitampura Unit 1 API facility located in Madhya Pradesh. Balarpur Industries is up as much as 5% today after the company said that it has entered into a deal to sell its Malaysian unit Sabah Forest Industries for a total consideration of about $310 million. And finally, we have an interesting name over here, Navkar Builders. Now, this is a small cap name, has a market cap of just 42 crore rupees and has done a top line of just 40 crores in FY17. It's locked in an upper circuit of 5% today after the company said that it has received an order worth 211 crore rupees for a sewage treatment from the Bhopal Municipal Corporation. Back to you guys.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. But on to the chart of the day now. NBCC has been beating analyst estimates consistently through the last financial year. But its valuation may be a cause of bother for some. Nikki Mirchandani joins us with more details on that. Nikki, over to you.
Thank you, Navneet, for this one. Well, most of the infra stocks have actually surpassed analyst expectation. But then one stock which deserves a mention is NBCC. Now, this particular stock has surpassed analyst expectation, or the target price, by at least as much as 15 times over the last 1 year. That you'd see, the yellow bar that you'd see is the number of times the stock has outperformed the target price tracked by Bloomberg. That's almost 15 times and almost highest as compared to rest of its peers. But then if you look at the valuation, they appear to be on the higher side. It is trading at a 1 year forward PE of 34 times, which seems to be at a premium of roughly good percent or a good margin as compared to rest of the peers who are trading at a 1 year forward PE between 20 to 25 times. So what explains this high valuation? Well, Antique Broking attributes NBCC's outperformance to the all-time high order book level level, which currently stands at 800 crore and also implies a compounded annual growth rate of a roughly 47% over the next 5 years, as compared to 20% that the company has done in the last 5 years. Besides that, we'd want to know if there is a further upside. Well, 10 out of 13 analysts tracked by Bloomberg suggest a potential upside to the stock and target a price of nearly 25% from the current market price. Back to you guys.
Well, thanks a lot for that, Nikki. So that's with regards to NBCC, has done reasonably well over the last 12 odd months. Actually has done really well over the last many years. Deepak Shenoy, founder and CEO at Capitalmind, joins us right now on the show. Deepak, good having you. Thanks so much for joining in. These days, we hear a lot of these pseudo-infra plays, though NBCC probably won't qualify as an infra play, but more as a converter. But a clutch of infra companies doing really well. Yesterday, we had Dilip Bindkon in the studios, and he was talking about how his margin profile will stay at 17-18%. His order book gives him visibility for 4 or 5 years, and there is reduced risk on projects because of the HAM nature of the projects as opposed to the BOT earlier. There seems to be a different breed of infrastructure companies out there for investors to bet on.
Good afternoon, Neeraj. I think there is, a change in the whole infra philosophy. Two things have changed. First of all, the build, operate, own and operate and then transfer model has, I think, from a public-private partnership perspective, more or less corrected itself, in the sense private players were not able to really secure funding for a long term. But now they're getting paid on more of a project basis, so that's easier to handle. Second of all, there is a change in some of the infrastructure guidelines. So when infrastructure companies get paid, typically it would go into a lot of litigation, and the litigation would be simply because the officials did not want to be known as having paid out without resistance of some sort. So the arbitration law now says that if arbitration gives you a certain payout, then the payment is made of at least 75% of the amount under arbitration, and then the remaining 25 is retained until, because after arbitration it still goes to the high courts. So these two factors have actually helped the unlevered, relatively low levered businesses, from KNR Construction to Dilip Buildcon to a slew of players, and as a disclosure, we own some of them. They've managed to kind of turn around quite substantially on the book. So very exciting times for some of them, but the old favorites of GVK and all that aren't getting anywhere close because they still own some of the older projects.
Okay, that's a view coming in on the construction space. Pull up the intraday chart of Shakti Pumps. That's seen a sudden surge in the last half an hour or something. The intraday chart will give you a better picture. And on YTD basis also, the stock's been giving good returns. It's up 14 to 15% as we speak. And the YTD chart will tell you it's outperformed the markets. In fact, it's up over 40%. Deepak, do you track Shakti Pumps?
Yeah, we own it from a momentum perspective. It's been doing really well, and I have I can't reveal much more right now, but there is a tremendous amount of interest in the stock. The stock's done really well. We're interested in the space substantially, but as a disclosure, because there is some kind of conflict, I'm not going to speak a lot more about it at this moment.
Okay, Deepak, what's the sense on the consumption names? We've been talking to almost every guest about Jubilant, but there is something beyond that too, right? Titan has had some fantastic moves. Avenue Supermarts continues to make money. Suddenly we see, V-Mart Retail and a couple of these retail names as well clogging in new highs. Trent is almost at new highs as well. What's happening here?
Trent actually did make a new high today, and so did. We are very excited about Titan for multiple reasons. The consumption story, the high-end consumption story, is captured by Titan. The low-end consumption story is perhaps by D-Marts because of the groceries. There's a lot of the mid-end consumption players also. I think this space is getting a lot more excitement because India. If you look at the top 50 companies in India, there's hardly any retail or big consumption story apart from Titan that's sitting in there. So the biggies, most of the large indexes around the world tend to have some large retailers sitting in. From the US, there's Walmart and a bunch of others in the UK and in Europe as well. So India is going to get one. We don't know which one. The thoughts have been around Future Group, around DMart, if it scales up, and a couple of others. But I feel right now the space is quite expensive, but the consumption story is huge. Titan in specific is something that's exciting from both a momentum perspective. The price momentum is fantastic, and also from the fact that so many jewelers have gotten caught into all these frauds that because they weren't running great governance, and there's a lot of insider dealings and bank collusion with bank officials and so on. So Titan kind of stands out because it's relatively clean, and you get a lot more potential from there. They're also getting into more of the high-end branding products like fragrances or perfumes, like bags, and apart from the watches and jewelry that they're already in. So owning high-end consumption and owning that as one of the players who will benefit from the fact that the rest of the competition has been beaten up because of the detection of frauds and the shaking up of this industry. I think Titan stands a huge chance to move. It's very expensive as a stock, so one has to consider that the bet here is that the growth will be massive, and based on that, that's the kind of story that we like, at least from a consumption point of view. I think that part of the story will continue to grow.
Okay, stay on. So much more to talk about, and we'll take in some questions with Sarvendra as well about what to do in a scenario like this. But it's that time of the show wherein we ask, first get you a sense of what stocks could fall in and out of the F&O ban, if indeed there is a list like that. Then get in Darshan and Yatin to speak about what dealing rooms are recommending in the session today, and then some closing strategies. Firstly, stocks in or out of the ban, Navneet?
Just one stock, Neeraj, and it's been quite surprising. For the first time, it's been over a week for this new series. We've not had any stock into the F&O ban, but Jet Airways is the one which could enter into the ban period for Monday's session. And the reason also being yesterday, if you look at the total OI as a percentage of market-wide position limit was just about 94.88, and for a stock to enter, it has to breach the mark of 95%. In all likelihood, we've seen some bit of addition for the futures and some of the option strikes. So it looks like this could be the one, rather the first stock of the April series to enter into the F&O ban.
Okay. Watch out for Jet Airways. Remember, Jet and SpiceJet, a completely dichotomous move to what has happened with Interglobe Aviation the last few weeks, or this calendar at least. In the morning, Sumit had brought out this chart of how Interglobe Aviation has done in calendar year 18 versus SpiceJet and versus Jet Airways. A remarkable difference out there for the largest player. Still in the green today as well after starting off in the red. So interesting move for Interglobe Aviation today. SpiceJet has moved into the green for the last 3 odd months. It's lagged Interglobe Aviation in a meaningful way. Jet Airways anyways correcting a bit in trade. Sarvendra, the aviation names, do you trade any of them?
I think Jet being the most liquid one, that is where we have views and we trade that regularly. My sense is that right now the stock is slightly oversold, and there's a first sign of some positive divergence coming in. So this is purely a trading view along with the market. I think there could be a 15-20 point pop. The stock still trades below long-term averages. So just a 15-20 point pop that will take it close to 640 on spot is what I would say if someone wants to trade. That is the trade to do. And if you are doing that trade, then probably you are keeping a 7-point stop loss. So either you are keeping a stop loss below 612 or 610. So you can choose, but I think 612, just below 612, you can put a stop loss and look for those trades on the long side till 650 or 640 odd.
Okay, stay on, gentlemen. Let's get a sense of what dealing rooms are recommending in the session today. Darshan and Yatin join in with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first.
Yeah, so some of the stocks that dealers are talking about. The first stock is Manappuram Finance. There's a buzz of a potential corporate announcement that could come in. The count has not done much today, but nevertheless, this is the first stock that's been spoken about. The next stock that dealers are talking about is Raymond. Again, coming in close to the 1,000 rupee level mark. Some of the HNIs are actively accumulating. Even day before, when the market did manage to correct significantly, Raymond was trading much higher. So Raymond is the second stock. And finally, the last stock that dealers are talking about is Make Money Organics. Some of the portfolio managers are accumulating this counter in the PMS. Not aggressive moves, but nevertheless, there seems to be some bit of accumulation that's happening at lower levels. But Yatin, what are you hearing?
Havells, that is one stock which is doing extremely well in trading today, almost 4% up on decent volumes, nearly 28 lakh shares trade in their cash segment. Dealers are recommending a buy today, sell tomorrow kind of a strategy here. Shakti pumps, and if you look at the last 15-20 minutes of trade, the stock has gone up to the roof, almost 16% up for that one. When we're talking about it, the stock was just 5% up, and a 10% move is what we saw in the last half an hour of trade. So on the back of fund action, dealers are indicating that Shakti Pumps is moving in trade and is expected to move further. And watch out for AI Engineering. That is also one stock wherein dealers are recommending a buy. There is a buzz of a block deal here. On the back of that buzz, dealers do indicate that there is some buying opportunity at lower levels as far as this stock is concerned.
All right, Yatin as well as Darshan for bringing that dealing room check with us. Sarvendra, before we let you go, any strategy for Monday that you have?
I think pharma names have turned up nicely. So if I have to do a BTST, I would probably pick a pharma name. I'll say that I'll pick Aurobindo. Overall, couple of names in the sector have definitely performed very well today, including Lupin. So I'll go with Aurobindo and say that I'll look to trade for a target around 626, 627 for Monday, and keep a stop loss below 615 and take a long trade for Monday.
Manav, any closing strategies that you may have?
See, at the current levels from the auto packs, escorts look good. The stock has been in a very good uptrend, and also after a sideways consolidation, we have seen the stock breach the levels of 900 and is likely going to see a good close above 900 levels. So keep a stop loss of 900, expect high targets of 940. I also like Hindalco at the current levels. In fact, there is a complete bear trap that has taken place into the stock. We have seen series of decline in the stock from the highs of 284, and there has not been any sustained retracement rally into this. In fact, in last couple of trading sessions, the stock has has seen a good rebound from its oversold levels and has been holding the key support levels of 210. So keep a stop loss of 208. Can also have a short-term targets of 220, but I think eventually the stock can rally towards the levels of 230.35.
We'll watch out for that, and I'm sure over the course of the next week or a week and a half, we'll revisit this strategy with Manav to figure out what to do if it does rally up to 230, 235 odd. Manav and Sarvendra, gentlemen, many thanks for joining in today and giving us your strategies and your time as well. Appreciate that. Okay, those are our technical experts. Last 10 or 12 minutes of trade left. By the way, I must say, Piramal Enterprises has clocked in some phenomenal move today. They're, of course, starting off a couple of other businesses as well. But it's probably a case of a marquee name having gone down through a period of correction, time and price-wise, and maybe seeing a little bit of buying. Deepak, just wondering what to do with a clutch of these names which are very popular as safe haven, consistent CAGR generating stocks. I mean, people talk about Piramal Enterprises like that, Kotak Bank, HDFC Bank. All of these have had a bit of a time correction over the last 6 or 9 odd months or so. Does that give ample safety room, or would you still question the valuations with some of these are? I mean, I've just spoken about 3. There are probably a lot more, but I'm using these 3 as an example.
Yes, I think, Piramal, for instance, the bet has been the new move into direct lending, apart from the fact that they're, doing a lot of institutional lending outside of this. The Kotak and HDFC, banks in general, they invent their own balance sheets to a large extent. So that's one of the reasons why HDFC Bank has been given consistent year-on-year profit growth. They just have to adjust their provisions accordingly. So HDFC and Kotak are more like these long-term compounding, slow compounding players. So that's one part that's, I think at least from next 1 or 2 year perspective, there's nothing in the visible horizon that seems to affect them. If you look at it, I think a lot of these names are continuing bets on the Indian retail purchasing or retail lending story, which is to a certain extent can only be affected if there are job losses or issues with retail, employment in some perspective. So I think they're safe as long as that is safe, and I don't see any immediate threats to it other than perhaps a small issue that I'm seeing or starting to see in real estate, where I feel that banks are perhaps a little over leveraged. That's one of the largest sectors now that banks and NBFCs are exposed to, and I feel that is perhaps one of the real estate prices correcting are perhaps one of the biggest risks now in some of these banks. It may not be in HDFC Bank, it doesn't do any real estate lending, but it may be in some of the others.
Deepak, Talwalkar's has been locked in lower circuit for the last 7 sessions, and we know the reason because of the demerger of the gym business. And the reason I'm talking about the stock, Capitalmind has written a note on it. Do you think the demerger is not offering good value to the current shareholders?
My problem with the Talwalkar's is not the demerger, but the fact that they're doing this really crazy situation where the name is called Talwalkar's Better Fitness Limited. You would assume a fitness company owns the gyms, but no, the demerged company called Lifestyle, Talwalkar's Lifestyle, will own the gyms. The gyms are the valuable part of the business, according to me at least. And even according to their own balance sheets, 28% of the pre-merger book value was to the Lifestyle business and 72% was to the gym business. The 72% has gone. It's become the demerged company that's not yet listed. It will be listed sometime in the future. When they list it, they will change the new company's name to Talwalkar's Fitness, Better Value Fitness. And this current company, which is currently called Fitness, will become Talwalkar's Lifestyle Limited. So when the demerger happened, people automatically thought, oh, it's the gym business that continues to be listed. And they quoted high values for it immediately after the demerger. When they found out that that's not the case, the stock's now locked in lower circuits for continuous days. So I feel some kind of investigation needs to happen over here. Why would you do something like this is beyond my imagination, because it's just obviously confusing to anybody to figure this out. So a little disappointed that that this should happen. I think we should let the circuits go at least until the lower price is discovered, and figure out how not to have these kind of situations occur in future. It's really disappointing and sad for our capital markets.
But Deepak, of course, I don't understand this issue as well as you do. But for people who are existing shareholders of Talwalkar's, they will still get a share in the gym's business as and when it lists, right? So I can agree from a perspective of somebody who's coming in afresh that there is a bit of a problem. But for somebody who is holding on to this Talwalkar share, what should he or she do? Because a bunch of guys got into Talwalkar's as a concept name.
Yes, I think they will receive these shares in their demat accounts. It will be unlisted until such time as Talwalkar's decides to list it. They'll have to go through a SEBI approval process and so on. So it won't be an IPO, but it's more like listing shares of a demerged entity. So they will still have to go through a SEBI process to do that. Once they do it, the shares get listed. You'll be able to sell those shares. That is when you will discover the value of pre-merger Talwalkar's of X price becomes A, which is what the price of Talwalkar's today is, which will be eventually the lifestyle business. And the gym business will list at some point, and that will list at a price B. So A plus B is equal to whether it was greater than your demerger price or not will only be realized after this second company list. It can take 4 or 5 months. In Grasim's case, for instance, when they listed demerged AV Capital, they listed AV Capital within 1 month. So it can be as near as 1 month to listing. And I think there was a company called PTL Limited. They demerged Artemis, and that took about 5 or 6 months to list. So it can be 1 month to 6 months to see the listing. So it's only when that other company lists is when you'll know whether you actually made a profit in this whole demerger transaction or not. So they're safe, yes, until that time. Safe being that at least they have some value that perhaps can be discovered later.
Deepak, just one follow-up question on that. What's the value do you see for the ex-gym business?
Right now, I think the gym business quote was supposed to quote at this 180 or odd levels, which is why people kind of took that as the price on the demerger day. That is, on the day after the EX date of the demerger is when you would have tried to discover the price of whatever was existing, and because people thought that was what was existing. 180 or 170, 180 or 190 was around the price of that. So maybe that's the right kind of price to look at. I don't know, because it's going to take about 6 more months. It could, fundamentals could change. So we'll have to see how that changes. Jan, Feb, March is usually one of the best quarters. Remember, people take on gyms and forget about going to gyms for the rest of the year, which is very bad for their health, but very good for their shareholders. So we'll have to see whether they will reveal those results in the coming month, and hopefully those results are better than expected, so we could see a re-rating at that point.
Okay, Deepak, just one last question. The clutch of these names which have zoomed up in trade, I don't know if you track any of these. You at times tend to track companies which I can't even think of. IFB Agro is up 20%, Forbes & Company 15%, Shakti Pumps, we already asked you, and some of the distillery names, maybe on the back of GM Brewery numbers, the spikes like Pioneer Distilleries, Global Spirits, etc. are all up and about. Track any of these?
So Pioneer was a stock we owned, so they are, I think, a subsidiary of United Spirits, and I think the bet there is largely that United Spirits will at some point take them over. They already own a significant chunk, and they will probably throw up an open offer and kind of subsume the company. Not tracking many of the others, we like liquor as a consumption play. There's some GST issues at some point which will get resolved, but coming year is elections, so I think we should see these names in positive territory, although one might look at it as more of a sinful thing than anything else. But I think from a shareholder perspective, the biggest risk is only that most transactions here are done in cash. Will the promoters give that cash back, as in show it on the balance sheet, or decide to keep them for himself? That's the question we all have to answer for each of the companies we select. So I'm not confident of most of them. United Spirits seems to be in slightly better hands, but again, I have to see how this pans out in terms of results and demonstration.
Okay, that's the view coming in on a couple of your alcohol stocks. Just want to pull up, you've got PNP, which has gone up in the last half an hour of trade, and also Balkrishna Industries. Remember, the tire stocks have been active. That too has seen some surge in the last 10 to 15 minutes of trade, closing almost at day's high level. But it's time for market closing. Let's head across to Neeraj Shah to find out how exactly today's closing is panning out. Neeraj, flat day, but a good week for the markets.
Yeah, I mean, considering that Monday and Thursday were strong days, you can't complain really, though Wednesday put paid to any kind of a sustained recovery hope. But a flat close, yes, for the markets in the session today. The mid caps and the small caps too, a pale shadow of what was happening yesterday. However, you would be happy with the 1% gain that we've seen in the small cap space for sure. This is only today's session, then we'll talk about the week in a bit. But in today's session, look at what's gained. Adani Ports is up about 1.5%. HDFC Bank has piled on some gains. ICICI Bank marginal gains for itself. ITC and Reliance marginally higher in trade as well. So these are heavyweights. SBI about 0.25% higher. They are not in the red, which helps the market. What has gone down? IT. So Infosys, TCS, there is HCL Tech in the red as well, in the part of the Nifty, not the Sensex, but in the red today. Larsen & Toubro marginally off. And autos have a slightly somber day in trade today. So the Nifty Auto Index really hasn't given the kind of returns that it gave in the previous two sessions. But that's about the large caps and the indices. Navneet, what about the mid caps?
Well, not a bad day, Neeraj. There were a lot of stocks in the broader markets which did see some bit of surge. And let me start off with IFB Agro. In fact, the stock we've been talking about right from the opening session, the circuit limit was revised to 20%. It had a gap up opening and it's closing with gains of nearly 20%. Shakti Pumps, the counter rallied in the last hour of trade. In fact, the dealing room check suggested that there was some bit of fund-based buying seen in this one. Let's see if there is any sort of follow-on buying which comes on Monday or not. Fineotex Chemical, that's the other one. which saw some gains in the second half of the session. That too almost closing around the day's high mark. So Finiotex Chemical also having a good day, closing somewhere about with gains of 15%. Punjab National Bank rose in the last hour of trade. In fact, the entire Nifty PSU banking index, which had a gap down opening, that also closed with gains of nearly 1%. So PNP was among one of the constituents there. The other one which rose was Havells. That too had a great session today. Havells registered gains of nearly 3.5%. We were talking about the liquor stocks. United Spirits had a good day, and also among the couple of F&O stocks, you had stocks like GMR Infra, Jubilant Food Works touching its fresh lifetime high. Significant amount of long positions being taken for the April futures. On the flip side, companies which went up yesterday, for example, MK Global saw substantial gains. So some bit of profit booking was seen for MK Global. That's closing with cuts of 4%. Idea was too under pressure. I think that also saw cuts of nearly 2 to 2.5% in today's session. In fact, Idea closing almost at day's low. And the other one was Dalmia Bharat. That too didn't have a great session in today's trade, and in fact the intraday chart will tell you that's closing around the day's low mark.
So all in all, Navneet was right. I mean, the day doesn't look that impressive. Just want to pull up the market breadth before we go on to what's happened in the week. I think the breadth must have improved a little bit. Yes, it did improve a little bit in the last 1.5 hours of trade, but fairly choppy today. Nothing too dramatic. The turnover should come up on your screen before we go on to what's happened in the week, and just pull up how the volumes have been. Well, the F&O volumes much lower, cash market volumes as well, nothing too dramatic. Yesterday was an exception because of the weekly expiry, but the volumes, well, subpar, to be honest. Nothing too dramatic here.
That's right. In fact, we've not seen much of build-up coming in for Nifty or Bank Nifty. Yesterday also, Neeraj, what you saw was majority unwinding. We saw unwinding from the FIs also for the index futures. So the fresh position, they've not started to build in yet.
Yeah, they certainly haven't. And then let's pull up what's happened in the week as well. And you will see fair bit of gains that have come into the auto pack. The likes of Tata Motors, Eicher Motors out here for about 5% odd. Tata Motors, you can imagine why. Lupin again, some bit of bottom buying, some bit of good news as well. The star to my mind the last couple of weeks has been Bajaj Finance, which is up 9% right now. For the last 15 days has gained about 15 or 18 odd %. And not too many losers, but IT's been a bit held back. I don't know if it's ahead of the numbers or maybe the stocks have had a bit of a run up, but TechM, HCL Tech, Infosys, all of these featuring in this list now.
That's right, and this is the space which so far was outperforming. Maybe some bit of profit booking coming for stocks like Infosys, HCL Technologies, and most of them. But net for the week, I'll say conquering once again the 10,300 mark is a good sign. But the only main question now remains whether there are more legs to this rally or not going ahead, Neeraj.
Yeah, actually, Deepak, that's the key question, right? I mean, the last time that we spoke, or the time before that you spoke, you were talking about how in a almost an SIP format, you are deploying certain amount of cash. Are you pushing back on the pedal a bit, or is that strategy still continuing?
We are actually still continuing because, I mean, the index is at one level, but some of our stocks are still, they've been in various stages of correction. In fact, the last 3 or 4 days, we've seen a significant rise in some of the stocks that we have, and we've our process automatically reduces some of the buying as the stocks go up. So there will be it's got the process probably going to continue till September. I'm still positive that we're going to see a turn, a fall from here. We possibly, I don't know where it's going to go, but I see the market correcting after these results. So we expect to still have cash to be able to deploy. So when we're deploying on an everyday basis, it's kind of automatically calibrates to the market. So, if I'm wrong, of course, I'll just be buying at slightly higher values every day. But if I'm right, I will be able to buy more at a lot lower than where we are today.
Deepak, if I can just ask you one final question. Are you buying the derivatives in any fashion whatsoever of really strong spaces, auto ancillaries, for example? Because almost everything in the auto space is showing such good numbers. So auto ancs, by the very nature, should have good business. Now, whether the companies manage to do well or not is a separate thing. Anything in the auto component space, for example, that you guys are bullish on, and if you are accumulating things within that pocket, even if you can't name a stock?
Yes, we are actually very positive on some of them. You know, the auto ancillary space is a lot of businesses that we perhaps don't like. I mean, there's some stocks which are really good in terms of results, but we feel that as electric vehicles get popular, their businesses perhaps are at risk. So companies that make sprockets or chains or spark plugs, you know, they are going to be less relevant than someone who makes headlamps or tires or motors. So I think you know, if you do a separation of the businesses and say, okay, what will be continue to stay relevant even if electric vehicles came in and took over the space, those are the businesses that we're really excited about. Some of them are expensive, some of them are relatively cheap. So we're buying actually a number of different players in the business, including companies that maybe classified as auto ancillaries but are not necessarily those, like battery recyclers, for instance, or some of the other players in the space. One of the things that you have to consider is that India's story is probably going to take about 10 or 15 more years, and we're still long Maruti, for instance. So I think continuing the next 15 years, we're going to see a lot of demand for auto. Maruti we bought simply because it owns 50% of that space, and why would you not want to own a 50% market share player of a space you think is going to do well? But that's really the only big auto company that we have in one of our portfolios, and we find the ancillary space better. As a warning, I'd also warn you, paying 35 or 40 PE for an ancillary is not such a great idea. So you got to bear with, do things in a more reasoned way that says, I'm going to buy them, but I'm going to buy them at prices that are reasonable. And if I don't see growth rates at that level, I won't buy them.
Yeah, but that's a strong caveat and a pertinent caveat as well. Deepak, Shenoy, such a pleasure chatting with you. Thank you so much for taking the time out and being with us today. We'll make it a habit, Deepak, of talking about one of the stocks that Capitalmind writes on every time that we speak, because it becomes a wonderful conversation. Thanks for joining in today. That's Deepak Shenoy of Capitalmind with his thoughts. Tell you what, we'll wrap it up on this leg of Countdown, but stay tuned, because up next we get your complete wrap of the trading day on Bloomberg Quint's Market Wrap. Stay tuned.
Sir, please believe.